Hello traders and welcome in a new daily market analysis video. Today is the 17th of March 2022 and this video is brought to you by the market research team at PU Prime. Yesterday we had a rate hike by the Federal Reserve, the first one since 2018. What happened to the markets? What do we expect during the upcoming or the next period? And today we're also having the Bank of England interest rate decision. So what do we expect and how to trade the current volatility in the markets? Those are questions that we will be answering in a moment. Starting off with the economic agenda for today, basically we can see here that the expected numbers are for the CPI or the Consumer Price Index, which is the main measure of inflation for the Eurozone. We are having those numbers to be announced for the month of February, as well as the Bank of England interest rate decision. Basically, markets are pricing in another rate hike of 25 basis points by the Bank of England. However, we will need to watch closely whether the Bank of England is hawkish or dovish, basically after the geopolitical tensions that are arising in Europe. We also have the building permits for the month of February, the initial jobless claims, as well as the Philadelphia Federal Manufacturing Index, and that's for the US economy. And we end our day with the GDP for the month of, or for the fourth quarter of 2021 from the New Zealand economy. Having a look on the charts, what do we have on the technical analysis? Basically, we have been advising more than once in our recent daily market analysis video that we are having a cluster of resistance here on the US dollar index around 99.30, and that's why we were bearish on the US dollar index. Basically, we expected a fall back to the support around 98 points. During yesterday's FOMC meeting, basically, and the press conference, we had this brilliant move to the downside, and we are still bearish. We are still having our targets around the 98 points. So we do have an opportunity of a short today on the US dollar index. However, we might have a retracement to the upside. A correction might be due. However, any upward move on the US dollar index should be a good opportunity to short on the short and the medium term, and that's for the dollar index. Having a look on the US gold, on the gold trading, basically we mentioned on the 4-hour time frame that we do have a very important cluster support area around the levels of 1910, and we expected that we should hold our trading above. Even if we had any false breakout to the downside, we are still bullish on the gold trading from here. We had this brilliant upward move from 1910 to 1933, currently trading around 1933, and on the 30 minutes time frame we can see here that the super trend is trying to, or already giving us, a bullish indicator. So we are still yet bullish on the gold trading. We do have our targets around 1960 and then the 1990 levels, dollars per ounce, and that's for the gold trading. Basically, on the US crude oil, a downward move. Currently on the 4-hour time frame as well as the 30 minutes time frame, we are still having some sort of a sideways range, a sideways movement. So having a look on the resistance and the support, we can see here that the resistance for the range that we are currently trading in is basically the resistance to be around $99 per barrel, as well as the support around $94 per barrel. So let me mark those for you. It's $99 to the upside and 94 to the downside. We are basically expecting a continuation of the range movement, especially that we have been trading very smoothly between those supports and resistance. So basically an upward move to the $99 per barrel is expected today. We will be waiting for a bearish price action from here. Any bearish candlestick, an engulfing one, a hanging man, a shooting star, whatever, and we will be having our shorts positioned back to the levels of the equilibrium, which is around 96.50 and then the $94 per barrel. And that's what we are having on for the US crude oil. Thank you very much for watching today's video. We'll catch up again in tomorrow's video, daily market analysis. Thank you very much and please stay safe.